Hi, my grade 11 students. We are doing now financial statement including adjustments. In the last slide, we practiced some questions to understand for you accrued income and accrued expense. We practiced some questions how to record accrued income and accrued expense in the ledger accounts, general journal, and how to record them in the financial statements. In this slide, I'm going to teach you how to record bad debts and depreciation in the general journal, ledger accounts, and extract of financial statements. Sometimes you may think, sir, we have done it. No, actually, we have done as initial part, right? But here I guide you how to record bad debts and depreciation deeply, including financial statements. I think you all are ready. You take your writing books and to write down these all questions what I have given to you, right? In the slide. Okay, let's move to the slide. Following is two methods to calculate depreciation. Depreciation, you know what is depreciation? There are two methods to calculate depreciation. There are two methods to calculate depreciation. How? First one is, depreciation equal cost minus cost subtract residual value. Residual value. We give a name for this. Instead of residual value, we can give a name residual value. Sometimes in the exam paper they will ask scrap value. Scrap value. Last video you can watch. I clearly explained this everything in the last video. If you want to revise the theory, you can watch the last video. Scrap value. Cost minus residual value, if not scrap value, divided by lifetime. It is the first method. Most of the year in O-level paper, they will give a certain percentage, calculate depreciation on cost of 10%, 5%, 20%, 15%, like they will give the different percentage. Then what you want to do? You use that method. That method is this method. That method is this method. What? Depreciable value into percentage of depreciation. Percentage of depreciation. Both methods are same, but we have to use different inputs to calculate depreciation, right? Now, activity. Cost of the machine is 800,000 and residual value is 300,000. Lifetime is 10 years. Calculate depreciation. First we use first method, second we use second method. Right. Then everyone write down the formula. What is the formula? Depreciation equal what? Cost minus residual value, if not scrap value, divided by lifetime. Right? Not your lifetime. Relevant properties, lifetime. Right? Okay. Now, then I write now depreciation. Depreciation equal what? Cost minus residual value divided by lifetime, right? Then how much the cost given? See, cost is given 800,000, 300,000, 10. 800,000, 300,000, 10. 800,000. 300,000. 10. What is that? 800,000 is cost minus residual value is 300,000. Lifetime is 10 years. Then how much? See, 800,000 minus 300,000 equal to 500,000. Annual depreciation is how much? 50,000. Understood or not? How we do that? Cost minus residual value divided by lifetime. Cost is 800,000. Residual value is 300,000. Lifetime is 10 years. Then 500,000 divided by 10, it is 50,000. Right? Remember this. I analyze this answer, then you can understand well. If the lifetime is 10 years, how many times we can do calculations? First year, how much? Then first year, how much? 50,000. Second year, 50,000. Third year, 50,000. Fourth year, 50,000. Like how many years? 10 years. You can calculate depreciation. Why? The lifetime is 10 years. Lifetime is 10 years. Then 10 times you can, 10 years you can use it. Right? Every year they allocate depreciation. How much? 50,000. Yeah. Is it 50,000? No, 500,000. It should be 50,000, right? Then 50,000. Then how many times? 50,000 into 10 times, no? Right? 50 into 10 means 50,000 into 10, right? Then how much? 500,000. This is 50,000, right? Into 10, 500,000. Then okay. Then okay. 500,000 is the depreciable value. Depreciable value. Depreciable value. Depreciable value means how much the value that we used to do the depreciation, to calculate the depreciation. What is the value that we have taken to write off 10% or 5% or 20%? That value is depreciable value. Depreciable value is calculated cost minus scrap value. Depreciable value, again remember, depreciable value is cost minus residual value. That is the amount, that is the value that we have used to calculate depreciation, then divided by lifetime, right? So here 800,000 was given as cost, right? 300,000 is residual value. Then depreciable value becomes 500,000 divided by lifetime. Then 1 year, first year depreciation 50. Every year 50, 50, 50, 50, right? Then 10 years, 500,000 we got. The residual value, you know, residual value means market value of the remaining part at the end of the lifetime. Market value of the remaining parts at the end of the lifetime. Right? Then 500,000 is depreciable value. No? 500,000 is depreciable value. That is the amount you used out of that machine. Machine cost is 800,000. What happened to the other 300,000? At the end of the lifetime, you can see there. That is the remaining part. You can sell it for 300,000 rupees. Then cost how much? This is the depreciable value. This is the residual value. After adding these two, you can calculate cost how much? 800,000. Then every time cost of the certain property, we break into two categories. How? One portion is depreciable value. It is the amount that we use to calculate the depreciation. The other part is remaining part of the property at the end of the lifetime. So we can't depreciate on that value. Why? Because it is actually we didn't use it, no? That's why. Then 500,000 is depreciable value, 300,000 is the remaining part of the value at the end of the lifetime. So that is residual value, scrap value plus depreciable value every time equal to cost. Every time equal to cost. Right? Okay. I think you understood well. Then the second method, you see the question now again. Annual depreciation. Then calculate depreciation using above details. How much? How much? 50,000. Right? Then annual depreciation is 10%. Annual depreciation is 10%. Then how do you do that? Then nothing to do, no need to do anything, right? What? You want to calculate depreciable value. Then here, actually how much the depreciable value? 800,000 no 500,000? 500,000. Into 10%. Then how much? The same value, no? 50,000. According to this method also, how many times you can do the calculation? 10 times, because lifetime is 10 years. 10% you think? 10%. Then when we go to the next year, other 10%, the total 20%. Next year, the total is 30%. Then how many times? If the lifetime, if the percentage is 10%, you can do 10 times only to complete 100%. If you use 20%, to complete 100%, how much you need? How many times? 20, 20, 5 times, no? 5 years. 20, 20, 20, 20, and 20. How many times? Then the final answer comes 100%, right? So like that, so any method when they give, so you can calculate depreciation using any method now. Understood? Yes. Right. Now you go to the next one. Next activity, cost of furniture 200,000 and residual value is 50,000. Effective lifetime is 10 years. Calculate depreciation. Right. Then we use the first method. What is the first method? Cost minus residual value, depreciation. Depreciation equal cost subtract residual value divided by lifetime. Yeah. Cost. How much? The question is provided it. How much? 200,000. Residual value? They have given in the question 50,000. Lifetime, effective lifetime 10 years. Then 200,000 minus 50,000, how much? 150,000. How many times? How many life? How long the time? 10 years. Then 15,000 is the depreciation amount for a year. Right? 15,000 into 10 times. Then how much? Total 150,000. Total 150,000. Right? Total 150,000. That is the method. Now the next one. Next one means same question, but they have given percentage for us. 10%. Right? Cost is 200,000. Residual value is 50,000. Then tell me how much the value that we use to calculate the depreciation. 200,000 no, 150,000 no, 50,000. Depreciable value. How much? 150,000. In the second method also we use the same value to calculate the depreciation. It is 150,000 into 10%. How much? Same value. 15,000. Right? How many times you can do the calculation? Here also you have to do the calculation. You have to do the depreciation calculation 10 times because we can use 10 years, right? Okay. Now the next one. Activity. Following details were extracted from the business of Dasun as at 31st December 2020. You know Dasun is well famous name these days. If you watch cricket matches, right? Remember, then here but the new one means you know this is regarding the bad debts. Can you check your memory? Do you remember what is bad debts? How it happens? Bad debts is this. If the business sell their goods on credit basis, if the business sells their goods on credit basis, the business can create some debtors. Debtors are created through credit sales. Debtors are created through credit sales. Debtor should pay money for us means to our business in future, right? But the problem is some out of the debtors are unable to settle their payments some fair reasons. The business tries to several times to collect money from the debtors, but if it is unsuccessful, then what the business does? Business neglect that debtor value, so it becomes a loss, expense to the business. That is called bad debts, not the good debts, bad debts. Bad debts, right? Every time bad debts attach with the debtors. Bad debts attach with the debtors. Okay. Balance of the debtors, how much? In this business, as at 31st December 2020, they had debtors 100,000. They have 100,000 debtors, but they have given instruction for us what? Even though they have 100,000 worth of debtors, 10% out of this bad debts. Bad debts. The business is unable to recover that value, right? Then 10% on debtors is written off as bad debts. Yeah, we have to calculate the portion is how much as bad debts. 100,000 into 10%, you know, no need to calculate. 10,000, 10,000, right? Finally, what they request from us, calculate bad debts and record above adjustment entries in the general journal and ledger accounts. Yeah. Do you remember the double entry for the bad debts? Bad debts account debit, debtors account credit. Yeah. Then remember this. First we have to do the calculations. Yeah. 100,000. Debtors how much? 100,000. Yeah. Into 10%. How much? 10,000. This is the bad debts, right? This is the bad debts. This is the loss. This is the bad debts. But they first question us, calculate the bad debts, it's okay. Second time, they ask what? Record these details in the general journal and ledger accounts. General journal and ledger accounts. See, yeah, they ask only that. Then you have to draw what? General journal and ledger accounts. Right. Now, I draw a general journal. And ledger accounts. Right. This is a general journal. Now it's familiar to you. Why? In the previous video also we have drew this general journal. Yeah, this is the general journal. If you want, you can add ledger page or ledger folio the other column, but it's not compulsory. But here I draw two T accounts. We need two T accounts to enter the details to the ledger accounts, right? Right. Date, description, ledger folio value. 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 Okay, now we name the accounts. I think you all remember the double entries, and what are the two accounts we need? Debtors, date, description, ledger folio value or cash. Value I put, it's okay. Date, description, ledger folio value, right? The other account is bad debts. Date, description, ledger folio value. Date, description, ledger folio value, right? You repeat and repeat again and again at home. Double entry, bad debts account debit, debtors account credit, bad debts debit, debtors credit, bad debts debit, debtors credit, right? Double entry is that. Now you name the general journal. General journal. General journal. Okay. Date, journal voucher. It's a source document, right? Description, debit and credit. Here, if you want, you can add other extra column, but it is not used, right? Okay. Now, how much the bad debts amount? Do you remember? How much the bad debts amount that we have calculated before, right? It is the how much? 10,000, 10,000, right? Then, first of all, you write the balance of the debtor. How much? Debtor balance you can put here 12/31st. Date is balance of the debtors how much? In the debtor account debit side you mention it is not the transaction, it is actually the available balance. Now you write off 10% out of this, right? If you need I can change the color, right? I'll change the color now, it's easy to understand for you. I use another color, this color, right? To write the double entry. Same date, you remove 10% out of this as bad debts. Then 10% means 10,000. Then debtors account credit, bad debts account debit. In the debtors account you write as bad debts. Bad debts. In the bad debts account you write as debtors. Debtors. Right? 12/31st. Right? 12/31st. Now, finally, what we want to do? Finally, after recording all the adjustments in the ledger accounts, we have to balance of them and we bring those details to the financial statements. Right? Now, 100,000. Here 10,000, but when we balance off the account, we take highest value, right? We get the highest value, and highest value we write as the total of the both side. Then this side 10,000, if this side is 100,000, which one is the highest? 100,000, the same value you write to the other side. Then why? Then it's easy to find the difference. Difference how much? 90,000. How much the real value of the debt after the adjustments? Balance carried down, balance brought forward. Balance brought forward 90,000. But in this question, they expect only ledger accounts and journal entries, right? No need to do the balance of the accounts. But here I teach you to memorize all the things what you have learned in grade 10, right? So that's why I do this balancing off, right? Then finally what we do? This bad debtors, not the bad debtors 90,000, where we should write real debtor. This debtors, I tell about this 90,000, right? This 90,000, where you write? Under the current assets, right? I don't write them here. In next activities, we can do full questions, right? Then what you do for this bad debts? To this bad debts, what you want to do? You transfer income and expenses account to the profit and loss statement. You know this. Then bad debts is loss, bad debts is expense. Then when you balance off the any income and expense account, you must remember you never bring balance carried down and balance carried forward at the end of the accounting period. Why? At the end of the accounting period, all income and expenses account directly you transfer to the profit and loss statement to calculate net profit or net loss. Right? Now 10,000, do you write here balance carried down? No, you write profit and loss statement. Right? But in the general journal, we record only the adjustment entry. What is the adjustment entry? Bad debts account debit, debtors account credit, right? Then we write them in the general journal. Yeah, what is the date? Say, remember 12/31st, 12/31st, right? 12/31st, 12/31st. Bad debts account debit, bad debts account debit. How much? 10,000. Debtors account credit 10,000. Debtors account credit 10,000. Yeah. Now you write the narration. 10,000 rupees is written off as bad debts. Right? That is the method. I think you understood well. Now we can go to the next slide. Following details were extracted from. Following details were extracted from, right? Were extracted from the business of Sana Boy as at 31st December 2019. Debtor balance is 50,000. Okay. Write off 5% on debtors as bad debts. Calculate bad debts, journal entries and ledgers. Right. 50,000 into 5%. Is it difficult to calculate? 50,000 into 5%? How much? 2,500. Right? Then they expect bad debts, journal entries and ledgers. Then we do the first one. 50,000 into 5%. 50,000 into 5%. Then how much? 2500. Yeah. This is the bad debts, right? This is the bad debts. Bad debts. You have to record them in the ledger accounts and general journal. Then what you want to draw? You have to draw general journal and ledger accounts. Quickly draw small general journal and 2T accounts, right? Now, general journal, right? Date, journal voucher, description, debit and credit. What else? You need more two accounts. It is debtor account and bad debts account. Date, description, ledger folio value. Date, description, ledger folio and value. Okay, now you name the accounts and columns and general journal details. This is debtors account. This is bad debts account. If you want, you can draw the bad debts account first, no issue, right? Then date, description, ledger folio value. 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 When you draw the account, you read the names of the columns, then it goes your memory. Then general journal, general journal, columns, date, journal voucher, description, debit and credit. Okay, now you know the value. We have done, we have calculated the value of the bad debts, 2500, right? Okay, now available balance of the debtors we must write first in the relevant account. 12/31, balance of the debtors, balance 50,000. Now you remove 2500 out of this. You want to remove why? bad debts amount is 2500. Then the same date you remove. Then in the debtors account you write as bad debts 2500. In the bad debts account you write as what? Debtors how much? 2500. Then what you want to do? The previous time also we have balance of the debtors under the current assets, bad debts in the profit and loss statement, right? Now 50,000 now it brings here how much? 47,500. Balance carried down, balance brought forward 47,500. This is the amount to be recorded under the current assets. All right. Now bad debts account 2,500, 2,500, 2,500. Then where? Profit and loss. Profit and loss. But you remember, we record in the general journal only the double entry related to the bad debts. How much? 2,500. It goes to the general journal the same date, 12/31. Bad debts account debit, how much? 2,500. Debtors credit 2,500. 2,500. Narration. 2,500 rupees is written off as bad debts. Bad debts. I think now you understood well. Right? Now, if you want to see clearly, I can show you general journal. This is, then debtors and bad debts account are these. I think the time is enough to write down, right? Now, next. Activity 3. This is the textbook activity, right? Textbook activity. If you want to see the textbook activity, you can turn the relevant pages, right? It's regarding financial statement including adjustments. In that lesson, activity 3. A business has purchased a motor vehicle for administration purpose, and the following information relates to the motor vehicles purchased. Yeah. What are the details? Purchase of cost of the motor vehicle is 800,000. It means the business paid to the supplier how much? See, 800,000. Okay. Carriage inwards cost from the showroom. After that, the business paid money to transport cost from the supplier place to the business place, 20,000. Scrap value 70,000. Scrap value 70,000. Scrap value, you know, residual value. Estimated useful life in years, 5 years. Okay. Cost of the motor vehicle, depreciable value of the motor vehicle. If the straight line method is used for depreciation, annual amount of depreciation. It's simple thing. You must remember this. When the business calculate the value of the non-current assets, when the calculate cost of the property, cost of the non-current assets, not only the amount paid to the supplier, right? We have to consider how much you paid to the supplier, carriage inwards, loading charges, right? If you import some item from another country, from Japan or America or any other countries, remember sometimes you may have to pay import tax also. That import tax also to be added to the cost of the relevant property. Right, okay. In this example, they have given the cost of the motor vehicle, the amount of money that paid by the business to the supplier, 800,000, carriage inwards, 20,000, right? Then how much the value of the total cost? Cost of the machine, cost of the machine, cost of the machine, cost of the machine, 800,000 and carriage inwards plus carriage inwards, how much? 20,000. Okay, how much the cost of the machine? 820,000. We found the answer for the first question. Cost of the machine is 820. The second one they ask, how much the depreciable value? Depreciable value. Depreciable means cost minus residual value. Cost minus scrap value. Depreciable value equal cost minus residual value. Cost minus scrap value. Same thing. Depreciable value is what? Cost minus scrap value. Cost minus residual value. Then cost is how much? You write the formula first. Depreciable. Depreciable value equal to what? Cost minus scrap value. Scrap value means residual value. Scrap value means residual value. Right? Then how? Say cost is how much? 820,000. Scrap value 70,000. Then how much? 750,000. 750,000 is what? Depreciable value. Depreciable value. Right? Now the third one they ask what? Third one they ask, if the straight line method is used for depreciation, annual amount of depreciation, yeah, right? Lifetime is given how much? 5 years. Then they just ask how much the depreciation, no? Annual depreciation. You know the method now. You know the method now. Depreciation. Depreciation. Depreciation equal what? Cost minus scrap value. Scrap value divided by lifetime. Lifetime. Yeah. Cost 820. 820? 820,000. 820,000. Scrap value 70. 70 means 70,000. Right? Then lifetime 5 years. Okay. Now how it comes? 750,000 divided by lifetime 5 years. Then how much? How much? 15,000 is the annual depreciation, right? Now you know how to calculate depreciation, how to calculate depreciable value. How to calculate depreciation? Cost minus residual value, scrap value divided by lifetime, right? Depreciable value, cost minus scrap value. If not, cost minus residual value, right? Okay. Now go to the next one. Carrying amount. Carrying amount. Carrying amount. It is called as the other word we use for net book value. Net book value. Do you remember net book value? Where we met it? When we draw the statement of financial position, do you remember the place where you write under the non-current assets? non-current assets. They are in the non-current assets. You remember we draw these kind of columns, right? We draw 3 columns, no? Yeah, we draw 3 columns, right? This column we give a name as what? We give first column cost column, right? Cost. After that what? Accumulated ACC, accumulated depreciation, right? Corner value, net book value. How we find this value? Remember, just I imagine some details, right? Then you think non-current asset, you consider non-current, you think computer, like computer we write here. Cost of the computer how much? 100,000. Just imagine, right? Accumulated depreciation also given in the question for the computer, 20,000. Then net book value how much? Cost minus accumulated depreciation. Then how much? Net book value 80,000. I think you understood now. Before I give the definition, you understood what is carrying amount. What is the net book value? How? Remember, carrying amount, cost minus accumulated depreciation. It is net book value. After deduction of accumulated depreciation, after deduction of accumulated depreciation, after deduction of accumulated depreciation, accumulated depreciation you can see in the middle. From the cost, cost is given here. Cost 100,000, accumulated depreciation 20,000, net book value 80,000. The other word we use, carrying amount, is net book value. Net book value is carrying amount. Carrying amount is net book value. Net book value is carrying amount. Same thing, right? Now, how do we calculate? Cost subtract accumulated depreciation. They will give in the question. Then the final answer is carrying amount, if not net book value. Understood? Yes. Now, next one. Following details are provided from the business of John T. as at 31st December, not the December, 31st March. Is it wrong? But all other questions we have done, year ends 31st December. Remember, it's not wrong, it's not a mistake, right? Actually, any business can start any day, right? So generally, we consider from 1st of January to 31st December. If you start your business on 1st of April, in the last year, your 12 months period finish 31st March in other year, next year. That's the way, simple thing, right? When you finish your 12 months, that time you can prepare your financial statement. It is your last date of the accounting period. So in the John T's business, they have provided some detail for us. Machine net cost 500,000. Furniture at cost 400,000. Okay. All the non-current assets are depreciated at 10% annually. Record about adjustment entries in the general journal and ledger accounts and extract of financial statements. Okay. Now, the thing is this. First of all, we have to calculate the depreciation for each asset, right? See, machinery 500,000. Machinery depreciation, you think? Machinery. The other one, furniture. Machinery cost how much? 500,000. Furniture cost 400,000. How much the percentage? Same, use the same percent. Both use the same percentage, 10%. Machinery depreciation 50,000. Okay. Furniture depreciation 40,000. Okay. That's all. we calculated the depreciation amount for the year. Do you remember the double entry? Depreciation account debit, provision for depreciation credit. If it's a machinery, machinery depreciation account debit, provision for machinery depreciation account credit. If it's a furniture, furniture depreciation account debit, provision for furniture depreciation account credit. It is the double entry, right? We have to draw 4 accounts and 1 general journal, right? Now we draw general journal first. It's a little big one. Why? We have to record 2 entries here, right? Date, journal voucher, description, debit and credit. Now you draw 2 ledger accounts, 2 ledger accounts or 4 ledger accounts, 4 ledger accounts, 4 ledger accounts. Date, description, ledger folio value, date, description, ledger folio value, we have to draw more 2 accounts. One is related to the machinery, the other one related to the furniture. How many accounts we drew now? Yeah. Now first one is general journal. No, 1, 2, 3. We have to draw 1 more account. Not only these 4 accounts, we have to draw financial statement also, but not the full extract of financial statement. Only the place where you record this depreciation related details, right? Here you need the profit and loss statement, only small one, only part of the profit and loss. The other one is what? Statement of financial position, non-current assets area, right? You know, 3 columns we have to draw. 3 columns we have to draw. Why 3 columns? See why 3 columns. I'll name them. SOFP means statement of financial position. I use short word, non-current assets, right? It's okay, no? Cost, accumulated depreciation, net book value, right? Here you can write machinery and those things when we found it, right? Then here profit and loss statement, P&L. We write depreciation. This is not motor vehicle, no. This is machinery and furniture. Both we write under the administration expense category. You can name the headings administration. Okay. Now ledger accounts you name, right? This one is, the second one is furniture, no? Provision for furniture depreciation. Date, description, ledger folio value, date, description, ledger folio value. This is provision for furniture depreciation. The other account should be furniture depreciation, right? Furniture depreciation. Furniture depreciation. Date, description, ledger folio value. Date, description, ledger folio value. Now the next two accounts are what? They are related to the machinery. Then machinery depreciation, the other account is provision for machinery depreciation. Provision for machinery depreciation account, right? Date, here also date. Depreciation, is it depreciation? No, description, right? Description, we are talking depreciation, but account we write description, right? Description. Here ledger folio, here also ledger folio. Value, date, here also date. Description, here description. Ledger folio, here ledger folio, value is value. Okay, now the only one we remain, it is general journal. General journal. Date, this journal voucher, this is journal voucher, right? Journal voucher. Description, debit and yeah, credit. Okay, now you take the first. First one is what? Machinery depreciation, annual is 10%, then 50,000. The other one is 40,000. First we do the first one, machinery, right? Machinery, right? Machinery. What's the double entry? Say, remember? We do this one at 31st March, right? March 31st. Machinery depreciation. Every time machinery depreciation is an expense account, so it comes to the debit side. Provision for machinery, credit. Here we write provision for machinery. Provision for machinery. How much? 50,000. But in the provision for machinery depreciation account, you write as what? Machinery depre. How much? 50,000. Now what you do? You balance off. After that, you can enter the details in the general journal. Then it's finished. No, it's not finished. You have to enter these details where? In the extract of financial statements. But we do first two here, furniture depreciation and machinery both. After that, one time we can write, we can enter the details in the financial statements, right? Okay, now we balance off this 50,000. 50,000. It's an expense or not? It's an expense, right? You know, income and expenses. To where we transfer? Profit and loss. 50,000. Here 50,000. 50,000. Balance carried down. Balance brought forward 50,000. Where you record this accumulated depreciation column, right? But before it goes, we can enter the details in the general journal also, then it's easy for us. 331st, you write machinery depreciation account debit, machinery depreciation debit, how much? 50,000. Provision for machinery depreciation, provision for machinery depreciation, credit. Then what you write? Recorded annual machinery depreciation. It's a narration, right? Recorded annual machinery depreciation. Depreciation of how much? 50,000. If you want one time, then so we can, these are first two steps finish, right? If you want to see immediately how much we bring those details to the, how we bring those details to the financial statements, we can do it. What you say? Let's do. Then you go to the financial statements where you write furniture machinery depreciation in the profit and loss statement. Where? Under the administration. Then you write machinery machinery depre means depreciation, right? Depreciation. How much? 50,000. Then you write under the non-current assets machinery, how much the cost? 500,000. It is given. Accumulated depreciation 50,000. Then 450,000. So if you understood this one, you can do alone the other one, right? Furniture one, right? We record the furniture depreciation in the ledger accounts first. You follow the same procedure that we used in the machinery. Here 331st, provision for furniture depre. How much? 40,000. Then provision for furniture depreciation, there you write furniture depre 40,000. Yeah. Then what you do? You balance off. Furniture depreciation account 40,000, only this year amount, right? 40,000, 40,000, right? You transfer income and expenses via profit and loss statement, right? Now you balance off this one. $40,000, 40,000. Balance carried down, balance brought forward 40,000. You bring this one where? Accumulated depreciation column. But before we go there, we have to record these details in the general journal. right? General journal, right? How do you say? You write it here. Furniture depreciation, same date, no? Furniture depreciation. Furniture depreciation. Depreciation account. Debit, how much? 40,000. Provision for furniture depreciation account. Provision for furniture depreciation account. Credit, 40,000. How do you say? You write within brackets, recorded furniture depreciation. Furniture depreciation of how much? 40,000. Right? Okay. Now you record these details where? In the financial statements. Under the profit and loss statement, administration expense category, you write 40,000 as furniture depre. Furniture depre. How much? 40,000. Okay. Then here furniture, you write cost is how much? It is given in the question, you can see above. But depreciation, accumulated depreciation 40,000. Right, then 360,000. Remember this, I'll explain something here. What is this? Remember, sometime, not sometime, most of the time, they will give provision for depreciation account balance, opening balance of the provision for depreciation account. Opening balance of the provision for depreciation account. Why? That account shows the previous year's depreciation. When we calculate current year depreciation, that amount to be added to the provision for depreciation account balance. Right? You remember, if this question is given, provision for machinery depreciation opening balance 50,000, this 50,000 is given, then this year how much? This year also 50,000. Now how much accumulated depreciation? It is 100,000. Then 500,000 minus 100,000, it becomes 400,000. When we go to the next accounting period, that accounting period also we have to allocate more 50,000 as annual depreciation. That time 100,000 plus next year, then 150,000, that amount you write as accumulated depreciation, right? So that is the method. In the next question we can do that kind of question. Now we go to the next slide. Okay. Following details are provided from the basis of Manikay for the year ended 31st December 2020. Manikay, well famous song these days. Manikay Mage Hite, right? Manikay Mage Hite, right? You remember in your mind, not Manikay this question, right? Furniture asset cost. Furniture at cost asset 1st of January 2020 500,000. Computer at cost as at 1st of January 2020 300,000. Provision for depreciation of furniture 1st of January 2020 100,000. To the computer 60,000. Furniture depreciation annually 10%, computer 20%. Okay. They expect the same details. What? General journal, ledger accounts and extract of financial statements. Okay. Now we have to draw general journal. We have to draw general journal. Date, journal voucher description, debit and credit. Right now, ledger accounts, you need 4 accounts, date, yeah, date, description, ledger folio value, date, description, ledger folio value, right? Next one, date, description, ledger folio value, date, description, ledger folio value, right? There are 2 accounts finished. You need more 2 accounts. We need more what? We need more financial statement and right. We need financial statement, profit and loss statement and statement of financial position, not the full, it's extract, right? Then here draw profit and loss statement. No need to draw full, right? It's half is enough, right? Yeah, this is statement of financial position, right? You name statement of financial position, cost, accumulated depreciation, net book value. Here you write non-current assets, right? Here profit and loss statement, here administration expense category. Administration, right? Then ledger accounts you have to draw, and I want to know the details. Provision from furniture, the other one computer, no? Yeah, furniture. We name these details first. General journal, date, journal voucher, description, debit and credit. First one is furniture depreciation. Furniture depreciation. Date, description, ledger folio value. Date, description, ledger folio value. Now the next one, date, description, ledger folio value. date, description, ledger folio, value. The second account should be provision for what? Provision for furniture depreciation. Furniture depreciation, right? Then other two accounts, date, description, ledger folio, value. 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 Yeah, first one is machinery, the other one is computer, then computer depreciation, right? Computer depreciation, here provision for computer depreciation. Yeah, now we go to the question. They have given the details. First of all, not like before, in this question they have provided us provision for depreciation account balance for the furniture and for the machinery. Before you enter the details, before you record the details, you must mention opening balance of the accounts, right? Now, how much the opening balances of provision for computer depreciation account and provision for furniture depreciation account, right? Provision for furniture depreciation 100,000, computer 60,000. Furniture 100,000, furniture 100,000, right? 100,000. The other one, computer depreciation, provision for computer depreciation 60,000. 60,000. These are the opening balances. You must write provision for depreciation every time indicate their balance in the credit side. You must remember that. You never mention their balance, you never record their balance in the debit side. Why? Depreciation and provision for depreciations are two different account. Depreciation is expense, so that's in we record the expense account debit side. Provision for depreciation is opposite, so then it goes to the opposite side of the relevant account. Oh, okay, now we can do the calculations. Furniture cost 500,000, right? Computer cost 300,000. How much the percentage is given? Now furniture depreciation 500,000 into 10%. 500 into 10%. Then how much? 50,000, but we calculate 500,000 into 10%. 10%, how much? 50,000, right? This is what? Furniture depreciation. Then you do this one. furniture depreciation. Thirty-first of December, 31st of December, 12/31. Provision for furniture depre. I use short words here to manage the space, right? 50,000. Now, furniture depreciation account, you write 12/31 as furniture depre, 50,000. Yeah. Now you can see how much the final balance of the furniture provision for furniture depreciation account. At the beginning they had 100,000. We record this year portion 50,000. It becomes 150,000. It goes under the accumulated depreciation column, right? I explained it before. Now practically you can see it here, right? Now what you do? Now you balance off 50,000, 50,000, 50,000. Here profit and loss statement, right? This balance where we bring? To where we bring? We bring them to the accumulated depreciation column in the statement of financial position. 150,000, 150,000, 150,000. In front of this you write balance carried down, balance brought forward 150,000, right? This is the amount, right? Then you can write this double entry in the general journal. How do we write? 12/31, 12/31. You write furniture depreciation account, furniture depreciation account, debit 50,000, provision for furniture depreciation, provision for furniture depreciation account, credit 50,000. Within brackets you write the narration, recorded annual furniture depreciation of 50,000. Yeah. Now we enter these details to the financial statements. Now we see how to enter them, right? Right. Profit and loss statement. You know, profit and loss statement, it's an expense. We write only the this year depreciation. How much? 50,000. What we write here? We write here furniture depre. That's only. Furniture depreciation, that's only, right? Then you see how to record this detail in the statement of financial position. Then furniture. Actually, how much the cost? Cost is 500,000. How much the final answer of the accumulated depreciation after recording this year depreciation? Before we record this year depreciation, it had only 100,000. This year 50,000 already recorded. Now it becomes how much? 150,000. Then how much? It is 350,000. That is the way. This is the point I explained in the previous activity. Now you experienced it here, right? Now you go to the next one. It is computer depreciation. Computer depreciation 20% they have given the percentage, right? 20%. The cost is 300,000. Then how much? 300,000 into 20%. If the 10% is 30,000, right? 20%, 60,000. Then we can enter these details to the ledger accounts. 12/31. Provision for computer debris. How much? 60,000. At the beginning, they had 60,000 balance. This year, depreciation also 60,000. We write here computer debris. Computer debris, how much? 60,000. Now finally, we get the total of this 60,000, 60,000, right? 60,000 here. Profit and loss statement, every time we transfer the income and expenses account balances, right? Now what you do, you get the total of this 120,000, right? 120,000. Here also 120,000, right? 120,000. Here balance carried down, balance brought forward 120,000. Then it's finished, right? Now this 60,000 we record in the profit and loss statement. This 120,000 we write in the statement of financial position. But before we record them there, we enter these details in the general journal, right? Now we go to the general journal. Computer depreciation account debit. Computer depreciation account debit 60,000. Provision for computer depreciation account credit 60,000. Narration you write recorded computer depreciation of 60,000. Yeah. Now it's finished. We have recorded these adjustment entries in the general journal and ledger accounts. Now we bring to the financial statements, right? First we enter in the profit and loss statement only the annual depreciation. Annual depreciation how much? 60,000. This is called computer depreciation, right? Computer depreciation. Then you write in the statement of financial position computer how much? How much the value? 300,000 value means cost, right? How much accumulated debris? 150,000. 120,000. 120,000. Then how much the net book value? 180,000. Right? This is the way how to record the depreciation in the profit and loss statement and statement of financial position, and how we record them in the general journal. I think you understood well. Let's move to the new slide. Following details were extracted from the business of Babu for the year ended 31st December 2020. This is regarding the bad debts, right? Again, we came to the bad debts. We are doing today mixed activities, right? Here and there, right? Because you know the theory, now we practice some questions, right? Debtors 30,000, bad debts 5,000. Write off 10% on debtors as bad debts. Give journal entries, ledger accounts, extract of financial statements. Extract of financial statements. Now, we have to draw two ledger accounts one general journal, and extract of financial statements, right? Then you draw general journal. Date, journal, voucher, description, debit and credit. I change the color now, right? It's okay now. I use red color to draw accounts. I change now blue color to write letters, right? Okay. Now this is general journal. Then you draw two ledger accounts, date, description, ledger folio value, date, description, ledger folio value. One account is not enough. We have to draw one more account. One more account. One is debtor account, the other one is bad debts account. Date, description, ledger folio value, date, description, ledger folio value. Okay, now we need the financial statements also. They are extract of financial statement. One place is profit and loss. The other place is statement of financial position, only the current assets area, right? Current assets area. Then we can name them. Here, statement of financial position, current assets. Why debtors we write under the current assets, right? Current assets, right? This is profit and loss statement. There we write under the distributing expense. Why? Bad debts, no? Distributing expense. Then ledger accounts. Date, description, ledger folio value. Date, description, ledger folio value. Date, description, ledger folio value. Date, description, ledger folio value, right? What are the two accounts? One is debtor, the other one is bad debts. Debtor we write top, no? Debtor. Then we write bad debts. This is debtor, debtor, right? Okay. Now the question is given us how much the debtor value, right? How much the debtor value? So debtor value we write in the relevant debtor account. Right, okay. Debtor value how much? How much the debtor value? 30,000, right? 30,000. Bad debts amount also given here, right? Okay. Debtor balance 30,000. Debtor balance 30,000. Debtors are the assets. We write the balance debit, balance 30,000. Check whether they have given or not bad debts amount. Yeah, bad debts amount also given 5,000. Bad debts is an expense, right? that balance also we write in the relevant account debit side 5,000. You must remember here, when they give the opening balances of accounts, you must record them before you do the adjustment, right? This question provided us opening balance of the debtor, so we write in the debit side of the debtor account because debtors is an asset. Already bad debts amount in the past they have done some bad debts. That amount was given us. It is 5,000. That one also we put into the relevant bad debts account. After that we can do now, right? Now 30,000. They say again you remove 10% of the debtors as bad debts. 10%, 30,000 into 10%. How much? 3,000. Now how do you record? Debtors account credit. If you want, I can change the color, right? I use another color. It's easy to see you. Then 12/31st, you remove 3,000 out of this as bad debts. Then debtors account credit, you write as bad debts. In the bad debts account, you put 3,000. There you write as debtors. When they do this, 12/31st, 12/31st. Okay. Now you tell me how much the real value of the debtors at the end of the period. You remove 3,000 out of 30,000, right? 30,000. 30,000. Then how much? 27,000 is the real debtor value. It goes balance carried down, balance brought forward. It goes to the current assets category. 27,000. Right? How much the total bad debts? 8,000. 8,000. 8,000. Right? It goes to profit and loss. Before you enter these details, the financial statement, you must record them in the general journal. So we write the double entry in the general journal. How? Bad debts account debit. Only the adjustment, right? Only the adjustment. 12/31st. Bad debts account debit. Bad debts account debit. Only this 3,000, right? The 5,000 already recorded. Debtors account credit. Debtors account credit 3,000. Right? Now give the narration. Recorded 3,000 rupees as bad debts. Yeah. Now we move to the profit and loss statement and statement of financial position. In the profit and loss statement under the distributing category, you write bad debts, not only the 3,000, you must remember that. Sometimes you may think like we calculated only 3,000. Why we write 3,000 plus 5,000, 8,000. 8,000 is the total bad debts for the year. But this time now we calculated only 3,000. But previous we calculated 5,000. The total bad debts loss for the year is 8,000. Then you write here not only 3,000, total bad debts you bring here. But from the debtors we can subtract only the bad debts amount given under the additional information. Then so you write here debtors how much? 27,000. 27,000. This is the way. I think you understood well. Again, I revise you the thing, the basic theory of this question. What is the theory? When they give the opening balances of debtors and bad debts, you must write them in the related accounts as opening balance before you do the adjustment. After that, you do the adjustment. Then finally, total bad debts you write under the distributing expense in the profit and loss statement, right? Under the current assets, you write after deducting debtors which was given under the additional information, the final debtors you write under the current assets, right? Now we go to the next slide. Right. Following details were extracted from the basis of Zonali for the year ended 31st December 2018. Right. They have given us two non-current assets, machinery and computer 400,000 and 300,000. Provision for depreciation, machinery 80,000, computer 60,000. Debtors are given, bad debts are given, water bill and house rent income also provided us. This question will cover all the additional informations. All the additional informations. Right? Then look at here again. You can read one time what are the details provided us. Right? Okay. Now see what they required. Record above adjustment entries in the general journal and ledger accounts, extract of financial statements. Now we have to draw general journal and ledger accounts. General journal and ledger accounts. General journal and ledger accounts. Right. This is the general journal, but we have to draw a large general journal. Why large general journal? Because there are a lot of adjustments, right? That's why. Now we move to the ledger accounts. Date, description, ledger folio value, date, description, ledger folio value, date, description, ledger folio value, same way you have to draw some ledger accounts. You can name all the accounts headings, right? Why? Date, description, ledger folio value, date, description, ledger folio value, right? You can record the, you can write down the, you can name the headings of the each account, right? Now we need the financial statements also, extract of financial statement. There are statement of financial, extract of financial statement. Then extract of financial statement, profit and loss statement, and statement of financial position. Here non-current assets area, and you need current assets area and current liability area. Okay, this is statement of financial position. Cost, accumulated depreciation, net book value. The other one, profit and loss statement, right? Here I draw the ledger accounts, but I don't expect to name of the headings of the each account. You know well now, we have practiced lot of questions now, right? You know the date column, description and ledger folio value, right? So you try to catch the basic theory of the adjustments. When you draw accounts in your book, you name, don't forget to name the columns, date, description, ledger folio value, right? In this question, I don't name the headings. I name the headings only the general journal part, right? Date, journal voucher, description, debit and credit. This is general journal, right? I use the blue color to write the details inside of the accounts, right? Okay. Now you go to the question first, right? They have given us what? They have given machinery at cost 400,000, computer at cost 300,000, provision for depreciation, debtor value and bad debts, water bill and house rent income, right? First we go to the adjustment. Provide 10% on cost non-current assets. Yeah. Then there are two types of non-current assets. What are they? Machinery and computer, right? Then machinery and computer. Now you go to the ledger accounts related to the machinery and computer, right? Machinery, machinery depreciation, The other one, provision for machinery depreciation, right? Then you must enter the opening balances of the accounts. 1st of January balance, provision for machinery depreciation account balance, right? How much? 80,000. Computer 60,000. Computer 60,000. right? This is provision for computer depreciation account. Computer depreciation account. Right? This is the balance 1st of January. 1st of January. Now, not only the provision for depreciation account, we need the computer depreciation account also. You name this account as what? Computer depreciation account. Computer depreciation account. Right? Okay. You remember here I teach you only bad debts and depreciation related adjustment. Why? In the last video, I taught you how to do the accrued income and accrued expense in general journal, ledger accounts and financial statements, right? In this part, I teach you how to do bad debts and depreciation related details. You can do yourself at home the other activities under this question, other additional information details under the question. If you have a doubt, you can watch the previous video to understand. Now, we go to the additional information. It says what? It says provide, provide 10% on cost non-current assets, right? Non-current asset 10%, then computer and machinery both on 10%, right? Then see the machinery cost 400,000, then 40,000, right? 300,000, then 30,000, right? How we do that? 400,000 into 10%, then 40,000. The other one, the same way, 300,000 into 10%, how much? 30,000. Yeah. Okay. Then you do the first adjustment, machinery depreciation. 12/31, 40,000. What you say here? Provision for machinery depreciation. Then provision for machinery depreciation account, you write machinery depreciation, but that account credit side, 40,000. Okay. Now, how much the machinery depreciation for this year, you know, finally we balance off and the final balance we transfer to the profit and loss statement, right? This also we record under the accumulated depreciation. Then without balancing, now you know, because we have practiced now more and more questions. Now you know how much the balance and how much we have to record them in the financial statements, right? First we enter these details in the general journal. Machinery depreciation 12/31. Machinery depreciation account debit, debit 40,000. Provision for machinery depreciation account credit 40,000. Narration you write recorded annual depreciation of machine. Right. Now we go to the financial statement part. There you write machinery how much? Machinery you write machinery 400,000. Do you remember the accumulated depreciation account balance of the machinery? You can check it in the account, right? 120,000. 80,000 plus 180,000 plus 20,000, 180,000 plus 40,000, 120,000. Now you can see machinery 400,000, 120,000. Then the final balance you write 280,000. 280,000, right? Now this is the way. Now you go to the next one. It is you go to the next one. It is computer depreciation part, right? Then computer depreciation we calculated before. How much? 30,000. Annual depreciation 30,000. If you want to see it, I can go to the next previous slide. I calculated here 30,000, right? This is the amount to be recorded. Now machinery computer depreciation, right? Computer depreciation account 12/31st. You write debit side 30,000 as provision for computer depreciation, right? Then computer depreciation account, provision for computer depreciation account, credit side you put 30,000. You write there computer depreciation, the date is 12/31st. Finally, accumulated depreciation account you bring 60,000 plus 30,000. How much? 90,000. But in the profit and loss statement you write 30,000. Now you go to the profit and loss statement. Profit and loss statement. Administration expense. Computer depreciation 30,000. The previous one, what is machinery depreciation? You put how much? They are 40,000. That is the way, right? Now you remember you can record these details in the statement of financial position, right? There computer depreciation 30,000, right? Then cost is how much? 300,000. Do you remember the accumulated depreciation? If not, provision for depreciation account balance? Yes. This year 30,000, the previous 60,000, the total 90,000. Then how much? 210,000 is the value. 210,000 is the value, right? Now, did we record this computer depreciation in the general journal? Say no. We have to record them in the general journal also, right? General journal. General journal. Then the same date, no? Then how do we record? Computer depreciation account debit. Debit how much? 30,000. Provision for computer depreciation account, credit 30,000. Narration. You write recorded computer depreciation of 30,000. Right? 30,000. Now bad debts. Right? Only bad debts. Then I think you can do bad debts, no? Can, no, can't. Here you have to do bad debts ledger accounts part. Right? Bad debts ledger accounts part and financial statement regarding details, right? I give here only the general journal entry. General journal entry. Right? You can do yourself bad debts adjustment. So I'll give here only the general journal entry, right? How you say? Then here the question is this: debtors 80,000, bad debts 5,000, right? You know this debtor account, you write in the debit side 80,000. In the bad debts account debit side, you put how much? 5,000. You can see the same question that I have done in the previous question. So you refer it again and you can do yourself, but I enter here general journal entry, right? General journal entry. Then the question is given bad debts how much? Write off 5% on debtors, not 6, as bad debts. Write off 5% on debtors as bad debts. As bad debts. Right? As bad debts. Then you see the amount of debtors how much? Debtor value is given 80,000 into 5%. How much? 4,000. Right? 4,000. Then we can record this in the general journal 4,000. What is a double entry? Double entry comes like this. How? Bad debts account debit, debit 4,000, right? Debtors account credit 4,000, recorded bad debts of 4,000. That's only. Now you know very well how to record this detail in the ledger accounts and financial statements, right? You can do yourself. Now we have done all the adjustments related to your syllabus, including additional informations. How do you record them in the financial statements? How do you record them in the ledger accounts? How to enter them in the general journal? We will meet in the next video with the new part. I think you understood well. Okay, bye.